Hi everyone, today let's talk about cash versus stocks, then we'll look at the new sentiment survey before we get into the calendar for next week, then we'll take a look at all of the longer term charts, then we'll look at my results for the week and my thoughts going into next week. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at cash versus stocks, over the long term, obviously stocks tend to outperform, and you can see that here. Over any 25-year period, cash never wins. Very small percent chance over a 20-year period. It does increase pretty dramatically as you get towards that 1-year range. And I do think we're kind of in a unique environment here where we see high interest rates, and it does seem like we're going to see interest rates decline over the next 2 years. Whether we get 1 or 2 more hikes this year depends on what we see with inflation, but either way, the dot plot, like we talked about in last week's video, does seem to be declining in general over the next 2 years, which means we should see things like bonds going higher over the next 2 years, assuming that nothing crazy happens between now and then, which does seem to offer a little bit of opportunity on the bond side versus stocks in the short term. We've seen lots of people talking about how the stock market is overvalued, big tech definitely being overvalued from a long-term investor's perspective, and this could be an opportunity to mitigate that risk, utilizing things like money market funds or even just traditional bond funds. Of course, this is going to vary from person to person. If you are very young and you're expecting to hold your investments for 25 years, then it may not matter to you, just buy the stocks and you'll be okay. But if you are within that 20-year window of retirement, I do think there's some opportunity in bonds and money market funds, at least in the short term. And we'll talk about how on the charts there is definitely some potential for decent downside. Moving over to the AAII survey, this one came out on the 23rd. You can see bulls down to 32%, bears all the way up to almost 36%, neutral still right in that historical average. So we're on the lower end for bulls, a little bit higher than average for bears. Obviously not anywhere near those 1-year highs, but we have definitely stabilized. And you could argue that we're actually tipping towards the bull side, especially if you are a contrarian trader. Moving over to fear and greed, you can see we are currently neutralized, just like we talked about. We were dipping into fear just a little bit on that big red day that we had on Thursday. Overall for the week, though, we are neutralized. 1 month ago, we were obviously in extreme greed. We talked about that multiple times on the channel. Momentum still greedy. Stock price strength has neutralized. Breadth definitely moving into fear. We've talked about that quite a few times. Definitely on the 50-day average, we are in an area where we could find some support, and we'll talk about that some more. Put-call ratio has definitely gone higher. We've talked about that as well. Market volatility, yep, definitely neutralized. I agree with that. Safe haven demand, this is always interesting. They're saying extreme fear here, but at the same time, we're seeing extreme greed on the junk bond side. Moving over to the economic calendar, on Monday, we have 2-year and 5-year auctions. Always interesting to see what they actually sell for interest rates. Looking at Tuesday, JOLTS report, that's going to be the big one. You also have consumer confidence, fairly interesting. Non-farms, ADP on Wednesday. That one has been coming back very high. We'll see if it's more in line with the previous read. In this case, GDP numbers expected to be pretty high on a quarter-over-quarter basis, but the price index is slowing down from the previous read in terms of expectations. Definitely interesting. Pending home sales also on Wednesday. Thursday, we get some inflation data here with PCE, core and headline. That'll be interesting. Fed balance sheet as usual. And then looking at Friday, we have non-farm payrolls, participation rate, unemployment rate. That'll definitely be interesting. And then at 10 o'clock, you have ISM manufacturing PMI and manufacturing prices. Overall, pretty heavy week in terms of data. Moving over to Max Payne, this has been pretty useful over the last 2 weeks. This is a low week, currently sitting around 850,000, put call ratio at 2.3. Not a ton of puts the way that we saw this week, but this could absolutely move during the week. Currently, definitely some puts here at 430, 435, a little bit at 440. Then there's a nice little lull before we get to 450. So 450 to 440 does seem like the area that we're going to finish. Does give you a little bit of upside potential from current prices. Definitely interesting. And we'll continue to cover this as it changes throughout the week. Moving over to the S&Ps here on the weekly chart, you can see we hit that trend line. We hit it once again this week and then rallied up to VWAP. on the SPX, definitely interesting. So we're holding that trend line. You can see that trend line marking the lows here in May, mark the tops in December as well as February. Now we're retesting that level as we look to see if we can continue this rally to the upside. You'll notice that momentum did flip bearish this week despite the bullish week. It was only a 0.82 rally, and the previous week was a 2.11% down, so absolutely an inside candle, definitely interesting. This is a tough one, right? So you threw a wick to the upside, could be just that counter trend rally for a little bit and then looking for a push down, certainly possible. Or this could be an initial test to the upside, looking for a rally off of that trend line. So not a lot of clear direction. Definitely looking for that trend line to hold. If that breaks down, then you're looking at the 21 EMA at 43.20, or this kind of midline trend line that I'm watching down around that 4,300 area. Again, we have a few puts in that area currently propping up the markets. RSI is starting to tick a little bit higher, so we're in this mid-range looking for some clear direction, and it could absolutely go either way in my opinion. If this is a retest, we should expect a bigger move down. If it's an initial test into that liquidity, we could be looking for a little bit of a continuation rally up to that 4,500 area. Moving over to the daily chart, you can see we had a rally into this zone, bigger move down over the last few weeks. And then we held at this 35.88 level on the SPY. We tested that level once again on Friday, ended up with that inside candle. You can see that big red bar on Thursday. Again, not giving you a lot of clear direction. We were holding this trend line. You can see we tested that and rejected off of it on Friday. Momentum still ticking towards bullish, and volume was starting to pick up from Wednesday into that Friday session, which was still a bullish candle. So you could absolutely look for a little bit of a continuation, in my opinion, certainly possible. But again, like I said before, if this level here breaks at the highly traded zone, 35.88, then you should be looking for a pretty substantial move down. And you can see that here on the up move. We had a consolidation, move through this area pretty quickly from that 420 area all the way up to that 432 area. Quite a few gaps on that run still waiting to be filled. And if this zone breaks, then we're looking for a pretty substantial move down all the way to that 144 EMA sitting at 421.52. Moving over to the NASDAQ on the weekly chart, very similar to the SPY with that inside candle, but it was quite a bit more bullish in my opinion. You can see how close we were to the start of the previous candle. 2.22% down last week, and then this week we had a rally of 1.68, almost finishing unchanged between the two, especially with the gap higher at the beginning of this week. Momentum still bearish, RSI still hovering in the zone. You can see this trend line that marked the bottoms here in October, November, grinded along that level, and then we're in that zone once again. We didn't hit the 21 at 14,430, certainly could break down, hit that level, get a longer term test, and then get a rally back into the zone, set up that lower high, and then we get the bigger breakdown. So a little bit more consolidation in this zone before we get that trend reversal. Certainly possible. Or maybe we just come down, test that 21 this week, and then we're off to the races starting to make some new highs. Certainly possible as well. Have to play this in both directions. This week did not give us a lot of clear direction. You can see those 3 consistent weeks in a row. A retrace at some point is usually likely after 3 weeks in a row, and it certainly could mean that we're just going to get the continuation back to the downside. 144 EMA sitting all the way down at trend here at 13,556. And if we get the move that I was anticipating on the SPY, that would be a very substantial move of around 9% down. Moving over to the daily chart, similarly to the SPY, it does look a little bit more bullish on the shorter time frame. You have that low, higher low setup like we talked about in the Friday video. Still an inside candle, typically indicating a potential for a reversal. Longer term trends are still bullish. You can see the 144 sitting all the way down at 335.94. Absolutely would be a substantial move lower. Again, if this level breaks here at 357.54, pretty substantial move. You had a little bit of consolidation in here around that 350 area, but this one, if that breaks, you can see a clear test, rally, retest, continuation. Definitely an important level there. If that level breaks, then you're looking at pretty substantial downside right into this consolidation high from 19 May, which is in line with that 144 EMA. So critical level here, watching that 357.54 level. Certainly could rally a little bit early in the next week. I would expect it to get rejected once again, kind of like we did on Thursday. So short term still looks a little bit bullish, momentum ticking towards bullish. RSI, you'd want to see that cross the 50 line, but volume on that Friday session was pretty decent. Definitely interesting. And like I said, critical zone here, short-term rally, potentially looking for a continuation lower after that short-term rally. Moving over to the Russell on the weekly chart, bearish candle, momentum ticking lower, RSI right at the 50 line, so we are neutralized at that 183.28 level. We've been talking about that one for a while, and you have the 21 EMA sitting at 183.06, as well as the 55 sitting at 182.17, so a couple of longer term support trends right there in that zone, which continue to hold. You have the 200 sitting at 185.29 as well. So we're kind of trapped in that zone right now. Still holding my support line, which is what I'm trading off of right now. If that level breaks, then there's a pretty substantial amount of downside potential to 179.17. Similar to the other EMAs, I would expect that if that breaks, it's going to move much lower. You can see the low from this previous consolidation all the way down at 172.60. I'm sure it'll find some support in this zone if that did break, but there's always a potential it could push into that highly traded zone, which is currently at 173.58. Definitely critical level. If it holds and rallies, could be a nice clean move, looking for a potential higher high, but if it breaks down from this level, could be a significant move lower. Moving over to the daily chart just for a moment, you can see that 144 and 200 SMAs. That's what we've been testing repeatedly. That 183.28 level continues to test that level and hold. As long as we hold in this zone, we're still good. Momentum starting to tick towards bullish a little bit. Volume not showing the same tick higher that we saw on the other indices, but certainly could hold in this zone. I wanted it to hold this trend and kind of consolidate and spike up to the 21. That's kind of what I was hoping for. But right now, consolidating at the level and could absolutely break either way. Moving over to the Dow on the weekly, you can see we hit that 21 EMA just for a moment and then rejected slightly from that level. Momentum still ticking bearish. RSI not below the 50 line quite yet. We did pull back, test that trend line and reject from there as well. We're in this consolidation range from June also. Overall, no clear direction. Tested the lows, tested the highs, consolidating in the zone. Still coming off of this previous high, looking to find out if this is an established low. If we're going to bounce off this level and establish a lower high or a double top, that would be interesting. The trend is still intact, so you could say this is a test of trend, looking for that rally, certainly possible. But if this 21 breaks, that's going to be a pretty big indicator that we're moving down to the 144 EMA at 334.28, certainly possible, which again would be a substantial move lower. Moving over to the daily chart, you can see that inside candle looks okay, momentum starting to tick towards bullish. We had that one step down on Wednesday, bigger move down Thursday, step down again on Friday. So you could argue that this is finally establishing a setup for a move higher on momentum, certainly possible. We're kind of in no man's land though. I don't really have a level here. Maybe you could argue 341.47 would be a level, but then those levels together would be pretty tight. Definitely a little bit tougher to trade in here. I don't really trade the Dow, but if I was going to, that's what I would be looking at. Realistically, I wouldn't look for a long until we got down to 339.11, or maybe even the longer term EMA is sitting at 337.46 on the 200. Volume was decent on the Thursday-Friday session. With that inside candle, certainly could be looking for a bit of a push higher, but realistically you're trading off of that 343.23 level like we talked about in the Friday video. Moving over to the equal weighted S&Ps, you can see we got a doji candle on the week, momentum still ticking lower. Everything looks very similar to the Dow and the Russell, which is typically the case. Hit that 21, hit the 144. We're below this trend that I was watching. We got below it last week. We tested it again this week. So we're consolidating between the longer term EMAs and that trend line now. If that breaks and we start to push up to 149.82, certainly possible. Hold that level, get a continuation up to these previous highs. We are coming off of what you could consider a double top going back to January and then here in July. If this midpoint breaks on this very long-term double top, that would indicate substantial downside, potentially down to these previous lows at 128. That would absolutely be catastrophic. I still think we would find some support at these previous lows and down around this 137 area, or even the 200-week moving average at 135.25, certainly possible. But right now we are stalled at these longer-term EMAs. Moving over to the daily just for a moment, you can see it looks very similar to the Russell, holding on these longer term EMAs, consolidating. If we get above this level and rally, certainly could get into that zone like we talked about. If we break down from this trend and take out the longer term EMAs, then we would be below all of the longer term EMAs on the daily chart, again indicating that strong potential for significant downside in my opinion. Moving over to copper versus gold, starting off with the ratios here, you can see we got a bullish tick on the momentum. We've been watching this as a higher low setup. We got a little bit of a continuation. Of course, we're consolidating at that 21 EMA and we have some upper resistance there. So certainly an area where you could absolutely see a reversal to the downside, just a short-term pullback. But if this breaks the highly traded zone around that 1950 area, starts to push up to these previous highs and my level here at 2022, that should indicate we're getting a higher low setup across equities, in my opinion. I typically view this as confirmation of direction of markets, and currently it's setting up that higher low, looking for a little bit of a rally. Moving over to NASDAQ SPY and NASDAQ Russell, you can see NASDAQ outperformed just a little bit this week, but momentum is still bearish. Again, kind of supporting that breakdown, retest, continuation type setup. Still need to see it get below the 21 EMA at 334. We're also above the trend line once again that I was watching. You can see that marking the bottom here in June, marks the bottom in May. A little bit of consolidation here at that level. And then right on top of that trend line, we did hold. So a little bit bullish on the NASDAQ versus SPY. NASDAQ Russell, NASDAQ absolutely outperforming. Hit the top of that range at 818. Momentum starting to tick a little bit more bullish. So NASDAQ expected to outperform the Russell. If this breaks out, that could be very interesting. NASDAQ SPY, more neutral. NASDAQ Russell, more bullish. Move it over to SPY divided by the M2 money supply. You can see we hit the lower bound of that trend line. Last week and this week, we rallied back up to that level, just above it, barely, right on top of it realistically. And we said this could be the case. We expected a rejection from here, which we did get. But as you can see, the last time we got into this zone, we came down, tested the lower range, chopped in here for a few weeks. And that could absolutely be the case. Get a little bit of a chop higher, ultimately getting that breakdown similar to what we saw at the end of 2021. Momentum, slightly bearish. Again, just like we saw on that movement right into that hold. This really does look like a very similar move to that 2021 high, consolidation and bigger breakdown. Moving over to Apple and Tesla, similar to everything else, bullish week. These are a little bit more bullish, however. You can see both of them engulfed the previous candle. Momentum still bearish on both. RSI got down to that 50 line and then rallied off of that level in both cases. So certainly could look for that lower high setup in both. And that does seem to be the trend across equities. Moving over to Broadcom and NVIDIA, these have been the big drivers for growth recently. You can see NVIDIA ended up throwing a wick on the week, so we had really strong earnings from them. But they couldn't quite hold the gains, rejected off of that trend line. Similarly on Broadcom, big wick to the upside, tested that previous high, and then rejected down to that mid-range. Momentum on both, still bearish. Huge volume on NVIDIA with their earnings. Still a very bullish week from the previous week, but that is a strong wick rejection, and you do have to account for that. Moving over to staples and discretionary. Staples holding that 144 EMA on the weekly chart, sitting at 72.40, right at my level. Just a couple of cents above the 144, but below my level. Momentum bearish, volume picking up on that down move. Not really what you would want to see. If it doesn't bounce early in the week next week, that's going to take out this level. And then I would expect to move down to 70.85. Discretionary, on the other hand, inside candle, still bearish momentum, similar to a lot of the other charts. Does look slightly bullish going into next week, still holding that 62 level. You want to see it get above that 166.78, potentially push up to 170.68. Moving over to sectors, you can see energy really the only thing positive over the last month. Oil and gas being the leader, even in comparison to energy as a whole. Everything else starting to struggle a little bit more. We've talked about this several times, and oil and gas and energy both seem to be topping out, at least in the short term. But as you can see, this is basically a market-wide sell-off with technology taking the biggest hit over the last month. Moving over to stocks above the 50 and 200-day averages on the weekly chart. Still very bearish momentum, still bearish RSI. But you can see that doji here, we've been talking about it on the 50-day average, does seem to be in an area where we could find some support. Last time we were in this zone, we had a nice little rally. Absolutely could happen once again after throwing a wick to those levels. Doesn't mean it's going to happen. Could absolutely push down into these bigger sell-off ranges. But typically I would expect to hold in this first test, get a little bit of a rally, then get a continuation lower, just like we've been talking about on the other charts. 200-day average, testing that 55, still holding this 49.76 level. Again, if this holds, rally up, set up a lower high, then we could expect that bigger push down into this 36 range, and that is what I'm looking for. Moving over to yields, just for a moment, you can see the 2-year yield getting above 5%, 10-year yield still holding above 4.25. It'll be interesting to see what we get on the yields for Monday. 10-year actually took a little bit of a step back. We had been seeing the 10 outperform, but it did get overbought. Momentum bearish here. Now we're seeing that 2-year start to rally a little bit more aggressively. Either way, as yields continue to go higher, we should see equities pulling back in general. Moving over to the dollar, you can see we've had a lot of weeks in a row here of bullish movement now. Still bullish momentum, still bullish RSI. Hit that next level at 104.41. If it breaks that level, I'll be watching the 55-week moving average at 104.96, right there, just above where we're at. I would expect a fairly decent rejection from that level, and that would fit the thesis here. Overthrow, breakdown, set up a higher low, potentially change trend to the upside overall. In general, on the weekly chart, this is still a mixed trend. We're below the 55, but above the 144, so we're channeling in here. And like I said, test, move lower, and if we set up a higher low and break to the upside, that could resume this overall uptrend, and that would be weak for equities. The last time we were this high on the dollar was the most recent lows in October. Moving over to the VIX on the weekly chart, you can see we had this consolidation. We've had a move up now. We're still at this trend line, testing some areas, and we rejected here this week. Momentum still bullish. And we're right in this zone where we can chop for a while. Doesn't mean we're absolutely going to break out into this higher level here, but it is certainly possible. We have not tested that 1177 area that I've been watching for a while. You can see that is an important level. If that breaks, then you could be watching that 9 1/3 area. That would be interesting. But right now we are chopping higher, continuing to make higher highs and higher lows, and it is something worth paying attention to. Moving over to my accounts, you can see I am slightly bullish going into the Monday session. I have a covered call on the IWM. I also have 2 covered calls here on the NASDAQ, as well as 1 strangle. So a little bit more neutral on the NASDAQ, but still trading slightly bullish going into the early part of next week. In terms of results, you can see I am up around 101,869. I believe that was about $1,200 on the week, which is pretty good. NASDAQ was up around 1.6%. I was up around 1.1, 1.2%, which is pretty good considering I only lost 0.4% the week prior when the NASDAQ was down 2.2%. Let me know down in the comment section what you think of holding cash over the next year or 2 years, or are you just continuing to buy equities at potentially high valuations? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.